Just like last week, we are talking about the 50-year mortgage. It's the big real estate buzz, so it's getting 2 weeks of coverage from me. Now, a quick reminder before we get into it, this loan, it does not exist yet. But in case it does happen like people are talking about, let's break it down with what a $500,000 loan would look like. Now, here's the difference of a 50 versus 30-year mortgage. Monthly savings, it would be about $169 less per month with a 50-year. Total interest, though paid, is going to be an extra $642,000 if you held it for the full 50 years. Sounds brutal, but almost nobody keeps a mortgage for 30 years currently. In the US, the average loan lasts about 7 to 10 years before either being refinanced or sold off. It used to be even shorter, but roughly 60% of the current mortgages out there are under 5%, so people are holding tighter. Now, if a 50-year loan ever becomes real, the possible benefits is this. It could help someone break into home ownership by lowering that monthly payment just enough for them to qualify or be comfortable with those payments. Then, ideally, 5 or so years later, after income improves, job change, promotion, dual income, whatever, you refinance out of it into a normal 30-year loan. Again, the 50-year is not available yet, so the fine print is unknown. But based on what we think we know, it's really a trade-off between short-term affordability and long-term interest costs. Now, before I sign off today, quick switch up. I was at a property investors meeting and a few things that really stood out that I thought could be intriguing for y'all. So first off, less than 30% of builders expect construction costs to rise over the next 3 years. This was based on a NHMC survey of developers and builders from September. Also, they found that there is a direct correlation between cities with lots of new apartments in supply and rent going down. Obvious, right? Basic economics. You build more, rent gets cheaper, simple as that. Just like you build more houses, home prices can get cheaper. Newly built apartments, they found, haven't seen rent increases in the last 3 years. And a big one, the rent versus buy gap is at a historic high. On average, it costs $3,100 more per month to buy versus rent. Hint, that's why they're thinking of implementing a 50-year loan. All about getting costs down. Now that's your Tuesday in 2. I'm Nathan Mathis. Until next time, peace.